Welcome to the Hurst Trading Room. My name is David Hickson and this is a video update for the 15th of December 2014. As always, before we take a look at the markets, please make sure that you have read and understood these disclaimers. Let's take a look at stock markets again. I've been focusing on stock markets over the past few weeks because there are some interesting things happening in those stock markets, and we're seeing particularly at the moment an interesting divergence between the US stock markets and the European stock markets. Over the past 2 weeks, I've been discussing the fact that, of course, the markets are heading down into the 80-day cycle trough. This is the S&P 500 that you see here. This is the nest of lows at the foot of the chart for the 80-day cycle trough. And as I mentioned 2 weeks ago, on the 1st of December, on this day over here, I mentioned that most probably the best trades to see us into the end of the year or into Christmas time would be short trades, and indeed that has been the case. Last week, price dropped down below the 20-day FLD, and as you can see, fell fairly sharply down into the 80-day cycle trough. Now, the S&P 500, the fall wasn't anything spectacular. There was a very, very big fall in the FTSE. And so I'm going to be taking a look at the FTSE and discussing the differences between the US markets and the European markets in the course of this video. But let's talk about the move down into the 80-day cycle trough that we're seeing happen at the moment. There's a guideline that filmmakers follow, which is that you should give your audiences what they expect, but in an unexpected way. That way they deliver movies that are within their genre, but they aren't completely predictable, and they keep the audiences interested. I often feel as if though the markets do the same thing to us. They give us what we expect, but they do it often in an unexpected way. And last week, I think, illustrates that point. We have been expecting, I've been talking about it for the last 2 weeks, we've been expecting a move down into this 80-day cycle trough. And last week the market did give us a move down, but it managed to do it in a slightly unexpected way, in my opinion. Not so much in the US markets. The move down was a little bit stronger and faster than I had expected, but in the European markets it was much faster and much stronger than expected. And I think that is fairly meaningful. But before we take a look at the difference between the US markets and the European markets, let's take a look at what has actually been happening here. You know that I focus on the 20-day FLD, that's that purple line over there. And I trade something which I call the FLD trading strategy, which has to do with the interaction between price and that FLD. Now, the FLD trading strategy works for all FLDs. It doesn't only work for the 20-day FLD. The 20-day FLD turns out to be a very reliable FLD to trade, and it suits my time frame. It's a kind of a swing trading sort of a time frame. You enter trades that you are in for between a few days up to about 2 weeks, and that's a time frame that suits me. In fact, if you'd like to learn more about the FLD trading strategy, then simply head on over to the Sentient Trader website. Here it is. You'll see a menu up at the top saying Trading Software and FLD Trading Strategy. And if you pop your email address into this box over here, watch starter videos, Hurst Cycles and FLD Trading Strategy, we'll send you emails about a series of videos which explain everything you need to know about the FLD trading strategy to really understand what I'm speaking about, and even to start trading the strategy for yourself. Now, the FLD trading strategy is based on a very reliable sequence of interactions that occur between price and the 20-day FLD. And that sequence of interactions occurs over an 80-day cycle, which is why the 80-day cycle is one that I often speak about. And so, of course, there is the 80-day cycle that we are currently in. And here is the first interaction between price and the 20-day FLD. We label it an A category interaction, and it's usually a very profitable long trade, as it was in this case. B and C occur when price comes back down towards the FLD, Often, particularly when the market is very bullish, price won't even come down to touch the FLD, but sometimes it will, and that's the B category interaction. That usually occurs just before the 20-day cycle trough. There's that 20-day cycle trough according to this analysis. The C category interaction is when price pulls back away from the FLD. Of course, if it didn't touch the FLD, then it doesn't cross the FLD or anything, but it does pull away from it to the upside. A D category interaction occurs when price drops down into the 40-day cycle trough. There is that 40-day cycle trough over there. And that's the D category interaction. Now, this was a very unusual D category interaction because usually a D category interaction involves price crossing down below the FLD. And when we look at the DAX in a moment, we'll see a typical example of a D category interaction, price crossing down below the FLD, and then the E category interaction as price breaks up above it. We are currently in an F category interaction, which is when price drops down below the FLD, and it offers a very good short trading opportunity, which is of course what I've been speaking about over the last 2 weeks. Next, we expect price to come back up to the 20-day FLD in what's called a G category interaction. Then it'll drop down in an H category interaction to form the 80-day cycle trough, which is expected perhaps even towards the end of this week or next week, but it's expected within the next week or two. Now, there's a very important thing about these interactions between price and the FLD, and that is that this sequence is a guideline, and markets, as I've already mentioned, give us what we expect, but they often do it in an unexpected way. So, for instance, take a look at the D and E category interaction over here. That was what we expected. We expected price to come down to the 40-day cycle trough, but it did it in a slightly unexpected way. In other words, price didn't actually cross down below the FLD. Now, the reason this happens is because, of course, the underlying trend, the combination of all the cycles, tends to distort the cycle shape. But at the end of the day, we always end up with an M-shaped cycle. So the M shape of the current 80-day cycle is looking like this at the moment, with its first peak before the 40-day cycle trough, then the trough coming down, that's the 40-day cycle trough, and then the second peak, and then we're seeing the move down. Okay, so that's the M shape of the cycle. It's a very reliable thing to track in the markets, that M shape of the various cycles. Now, we're facing an interesting situation at the moment because we're expecting a G category interaction, as I've mentioned, and that means that price is likely to come back up to the FLD. It will often touch it, then perhaps track along it for a few days, and then drop down again. But we have to be very careful because we have a bullish underlying trend here. If you don't understand what an underlying trend is, then go to the Sentient Trader website and we will email you the 10 core concepts of Hurst cycles, which includes the discussion of underlying trend. It is basically the combination of all cycles longer than the cycle that you're considering. So if we are considering the 80-day cycle here, which of course we are, from a trough there to a trough here, that 80-day cycle, if we look at the longer cycles than that 80-day cycle, we have a 20-week cycle, a 40-week cycle, and an 18-month cycle. All three of those cycles are pushing up. So the underlying trend is +3. We could go longer than that, and I've had interesting questions recently about how long should you go. Usually I only go up to about the 18-month cycle, but you could go longer. And the 4.5-year cycle, I believe, might be heading down, which means we would subtract a 1 at that point. And so perhaps our total underlying trend is only +2. But whether it's +3 or +2, the point is, it is bullish. In other words, the longer cycles are still pushing up. Now, when the longer cycles are pushing up, we expect troughs to occur early in the market. It's a very important fundamental or core concept of Hurst cycles. So we are expecting the 80-day cycle trough to occur early because the underlying trend of the 80-day cycle is bullish. Those longer cycles are pushing up. So what do I mean by it occurring early? Well, the average wavelength of the 80-day cycle is 68 days. So we would expect the 80-day cycle trough probably to occur before the average duration of the 80-day cycle, which is 68 days. Can you see how many days have elapsed already since the most recent 80-day cycle trough? There it is. That's the bar count over there. 61 days have elapsed. So that would indicate that we expect the trough to occur sometime within the next 7 days in order for it to occur early. However, there are some subtleties. The recent average wavelength of the 80-day cycle, as you can see at the foot of the chart over here, is in fact 93 days, 92 days. So recently the 80-day cycle has actually been running fairly long. So we're expecting it to occur early, and some people would say that means that we would expect it to occur earlier than the recent average wavelength. So in other words, we would expect it to occur earlier than within 92 days. The bottom line is that we should stand by and look for the opportunity to get into a long trade as price bounces out of the 80-day cycle trough. Now, of course, we are expecting the price to come up to the FLD and then track along it, to then come down, and then we will get into a long trade. But I will be standing by and watching price as it approaches that FLD, because that is our expectation. When we have well-balanced cycles, the interactions are perfect, and we will get a perfect tracking along the FLD. But it is also possible, because we are expecting the 80-day cycle trough to occur early, it is possible that we might simply see a very strong move up straight away, and we should get into that long trade as soon as price interacts with that FLD. I will be watching it, and you will notice that the price always responds to and reacts to FLDs, and I'll be watching as it approaches that FLD, and if it starts showing signs of finding some resistance as it approaches that FLD, then I will delay my entry into the trade. If, however, it looks as though it's steaming full speed ahead through that FLD, then I would be interested in entering into that long trade straight away. Now, as a matter of interest, I've focused entirely on the 20-day FLD, but I'd like to pull up some other FLDs, because price interacts with all of these FLDs, and although I trade the 20-day FLD, watching the other FLDs gives us very useful information about what's happening in the markets and what to expect. So let me add one FLD at a time and speak through what has been happening as price comes down into the 80-day cycle trough. Now that is the 40-day FLD, the next longer cycle, and can you see how when price crossed down below the 20-day FLD on Monday of last week, it dropped on Tuesday right down to the level of the 40-day FLD. Do you see that? And it found a little bit of support at that point. Now, of course, we did expect price to drop down through the 40-day FLD, and I'm not going to go into too much complicated detail here, but we did expect price to cross down below that 40-day FLD because, of course, of the sequence of interactions between price and the FLD with the 40-day FLD. We expected it to come down, and what would be the next event in terms of price interacting with the FLD? The next event would be price interacting with the 80-day FLD. So let me ask you a question. Do we expect price to drop down or cross down below the 80-day FLD? Or do we expect price to find support at the 80-day FLD? Well, we go back to our sequence of interactions, and so we're considering the 80-day FLD, and I'm going to show it on the chart in a moment, but I think it's an interesting intellectual exercise to think about this first. Following a trough of 2 cycles longer than the 80-day cycle trough, which is the 40-week cycle trough, and of course that trough occurred in the middle of October. Following the 40-week cycle trough, we would expect a sequence of interactions between price and the 80-day FLD, which would be something like this. First of all, we would have an A category interaction as price crosses up above the 80-day FLD, wherever that FLD is, and we're going to take a look at it in a moment. Then we would expect a B category interaction as price comes down to the FLD round about the time of the formation of the 80-day cycle trough. So we would expect price to come down to the FLD, to the 80-day FLD, track along it, before bouncing up again in the C category interaction. So I ask you again, what do we expect now in terms of price interacting with the 80-day FLD? The answer is very simple. We expect price to come down to the 80-day FLD and to find support at the 80-day FLD, probably to track along it for some time and then to bounce back up again. Now, this is purely a guideline, but let's take a look at what actually did happen with the 80-day FLD. There is the 80-day FLD, and can you see what has happened today? Price has come down to the 80-day FLD, and it is already bouncing up a little bit, but of course this is an after hour or before hour trading. But my expectation is the price will in fact track along this FLD a little bit. It might drop down a little bit below it, but I expect it to track along the 80-day FLD and then bounce back up again. So I hope you see how useful it is to take a look at other FLDs and not simply to focus only on the one FLD in the markets. The way in which price has behaved recently is explained very clearly by the FLDs on the charts. Of course, I resist plotting all of these FLDs on a chart at one time because it does get very complicated and it's difficult to work out what is going on when you have too many of these FLDs. Let's take a look at some of the other markets. Let's take a look at the Dow, for instance. We have exactly the same situation unfolding in the Dow. You can see that at the moment we are expecting a 20-day cycle trough to form in the markets. It should have formed over the weekend or perhaps even today. There's the nest of lows for the 20-day cycle trough. We would expect price to bounce up to the FLD and then come down again. Let's take a look at the other FLDs quickly. We'll just spin through them, not spend too much time on it. There is the 40-day FLD. You can see price hesitated. I've lost the focus on that line, but price hesitated slightly at the level of the 40-day FLD, which had a day of fiddling around at that level. Then it dropped down again. And let's take a look at the 80-day FLD. Here is the 80-day FLD, and again, of course, we are expecting the 80-day FLD to provide some form of support. Now, this is very much a guideline. Sometimes price will just drop down below that FLD, but as a general guideline, we expect that FLD to provide price with some support at this point, which is why I am expecting to see a little bit of a bounce. Let's take a look at the Nasdaq and we can see what has been happening there. Again, exactly the same situation. Price has come down as we expected, and it is forming fairly soon a 20-day cycle trough. But there's something to be said about these nests of lows at the foot of the chart, and that is that, of course, they are based on the position of the previous troughs in the market. So you can see the 40-day cycle trough has been phased over there, I think, and the 20-day cycle trough is phased over there. Now, in this pretty much straight upward line movement, there's very little cycle movement visible in the market at that point. In that movement, can we say that we are 100% confident in the placement of those troughs? I have to say no, which means that, of course, those troughs could have occurred a few days earlier here. Perhaps the 40-day trough occurred slightly earlier, which means that this 20-day cycle nest of lows is not something to sort of bank your future upon. It might well have occurred last week. That 20-day cycle trough could have occurred on Tuesday of last week. There was a suitable trough at round about that time. So you have to always look at an analysis and say, how convinced am I in the finer details of this analysis? But let's take a look at some of the other FLDs. And here you can see the 40-day FLD, which, again, formed a level of support last week. Market came down to it on Tuesday. Wednesday it formed support. Thursday it formed support. Finally broke down below the 40-day FLD on Friday of last week. Where's the 80-day cycle FLD? It is a lot lower down, as you can see. And so we haven't reached it yet. And it looks as if though the market is not even going to get down there today. It might certainly get down there sometime within the course of the week. and we do expect it to get down to about the level of the 80-day FLD before price bounces back up again. Let's take a look at the European markets. Let's quickly take a look at the DAX and speak about some of the differences in the European market. First of all, the cycles have been much clearer in the DAX. Look at this 40-day cycle trough. That's a fairly obvious and clear position for the 40-day cycle trough, as I have spoken about before. And you can see the interactions between price and the 20-day FLD much more clearly here. There is A. Here is B, as price came down to the 20-day FLD. C, as it bounced back up away from the FLD. Here is D, a slightly messy but nevertheless a cross of the FLD. E, as price crossed back up above the FLD. Here is F, again slightly messy, but nevertheless there it is, the F category cross. We expect the G category next, and then of course an H category into the 80-day cycle trough. There's the nest of lows, which is expected towards the end of this week. Now here again we expect an early cycle trough to form, which means that I will be standing by to take advantage of price bouncing out of that 80-day cycle trough in the DAX. Let's quickly take a look at some of the other FLDs and see what they are doing in the DAX. And there's the 80-day. So here you can see the 40-day FLD over here, and price came down below it, maybe caused a little bit of a pause in the movement, and here's the 80-day FLD, quite a lot lower, but of course the FLD climbs up by the end of this week, and next week it's at the level at which price is now, and so I don't expect price to cross strongly below the 80-day FLD in the DAX. Having said that, let's take a look at the FTSE. In the interests of keeping these podcast videos nice and short, I will be discussing the European markets, or in particular the FTSE, in relation to the US markets in a second video this week. If you're interested in why I believe the FTSE, the British markets, have turned bearish already in advance of the US markets, then please take a look at that second video. Look out for the formation of that 80-day cycle trough. I do believe it is coming soon. I won't be publishing over the festive season, and so the next time that we will meet will be early in 2015. Have a great festive season and a wonderful new year. I look forward very much to helping you to make 2015 a profitable year with Hurst Cycles.